Estate agent Foxtons has posted a 30% drop in annual profit against the backdrop of last year's Brexit uncertainty. Earnings before interest, tax, depreciation and amortisation (Ebitda) fell to £2.5 million during 2019, a year-on-year decrease of 30% from 2018's £3.6 million. The estate agent narrowed its loss before tax from £17.2 million last year to £8.8 million for 2019. Foxtons' revenue fell 4% to £106.9 million in 2019, compared to £111.5 million in 2018. Lettings revenue slipped 2% to £65.7 million while sales revenue slumped 10% to £32.6 million. Its cash balance also fell 13% year-on-year to £15.5 million. With the continuing uncertainty over when or if the UK would leave the EU last year, Foxtons reported a drop in buying and selling activity. Foxtons also blamed a ban on tenant fees for hurting its lettings business, amounting to a £2.7 million hit. However, the company today gave a positive assessment for the year ahead on the back of December's decisive general election result. Read more. Falling London house prices hit Foxtons' revenue. Our sales pipeline is currently ahead of last year, however we are well prepared for further challenging conditions in the sales market in the run-up to Brexit, Chief Executive Nic Budden said. In line with the struggling estate agent's current policy, no dividend will be awarded as the company tries to get back on its feet amid a weak housing market. Sign up to City A.M.'s Midday update newsletter, delivered to your inbox every lunchtime. Read more. Foxtons share steps down after turbulent year-Investors sent Foxtons shares down 5.4% to 74.2p, however, as they looked ahead to the UK's tricky Brexit trade talks with the EU. Budden added, "Overall, we are pleased with our resilience in this prolonged downturn. The business and our people have proved adaptable and resilient, delivering stable results. We continue to maintain a strong balance sheet with no external borrowings. Uncertainty remains over whether new Chancellor Rishi Sunak will make any changes to stamp duty in his March budget. Read more. UK house prices grow at fastest rate for 18 months in February. Housing remains high on the political agenda with a shortage of affordable homes to buy and rent. This problem is particularly acute in London and the South East. Broker Peel Hunt urged investors to sell their shares, saying, "The outlook remains tricky given ongoing Brexit-related uncertainty and the lack of liquidity in the second-hand housing market." UK house prices enjoyed their fastest rise in 18 months in February, Nationwide said today. For more on this story, visit the news article link.